Hey everybody, this is Marsilio, and thanks for your interest in my take in the markets. Tough week for many, although Bitcoin holding strong. Going to keep to the usual format and try and compress everything I want to say in a length that is useful for you. So review some charts, a little bit more focus on some charts and review and next moves and data edges. So here we go, review. Did I have a pretty good read on index top coming up? Actually, yes. Tweeted out day of the Dow high, nailed that top, and which is the first time I really indicated or been concerned about a larger market top this year. So that was spot on. And then even the week before last, started to think a larger drop was on the way due to various technical clues. But did I nail last week? Absolutely not. I was really thinking we'd have a mixed week with bounced attempts and then give it up. So a huge miss. And as a forecaster, it's really tough because it's like, isn't that your job to tell us when the big happen? And yeah, I'm aware of that. So if you're interested in the Astro version of why I think things changed, I did a section on Twitter/X, but I'm not going to go all through that here. I will look at some charts, see how technicals did, and talk about other clues. So, any kind of experience like this, we can get mad about it, we can be sad about it, or a learning experience. So I try and view it as a learning experience. So that's review. Let's look at some charts. So here is Bitcoin. Started with this, and it's still holding above its rising 10 MA, which is now like the strongest asset class, although the others are not nearly in the same position. Even, of course, all the tech leaders gave it up last Friday, massive drop, semiconductor index. And this is SOX index, but even among the leaders, really gave it up towards the end of last week. Microsoft, Meta, Amazon, and of course, NVIDIA. So you know all this. I'm not telling you anything new. So let's look at a few clues, or I want to discuss what the right positioning was around last week. So if you're a day trader, it doesn't matter. You could be in a downtrend and have a massive gap down and then a huge rally and make money on it. So that doesn't matter. Swing, obviously, money was in the short side, and looking for longs didn't work at all. And that was just a matter of waiting for setups and then having here's a okay looking ES 4-hour bar, but still pretty severe downtrend. We recognize we're buying into that and just playing it with, and that would have been stopped out unless you were up in the middle of the night Eastern time to catch that wick down to the monthly and weekly S3, which is a pretty rare tag. Even that gave it up pretty much by the end of the day. As a daily chart investor, I want to go through and see, I think some of you have turned on all my technicals, including the tweak MACD. So how did this do? And this is something I was pretty clear about, that at some point I saw all mean indexes, my tweak MACD rolling over. So here's S&P, this monthly pivot, if you're, again, it really depends on the time frame. And it chopped around here for a little bit. So adjusting a portfolio based on monthly pivot is not always going to work. But MACD shifted negative with falling MAs, not all of them, kind of towards the end of last week, Wednesday, Thursday, Friday, things rolling over. Even Friday, though, was above the daily 50 MA on S&P. NASDAQ, again, breaking moving average, sitting there on the second quarter pivot through last week, and then boom, gave it up. Dow from the top below second quarter pivot earlier, the fourth, MACD down from the negative from around the same time. And then small caps Russell actually a great hedging vehicle and weakest overall below its pivot here. So everything was trending down. This signal line that I'm referring to is the basic trend. And so, this is why I like using technicals. It's objective, bias or not, everything had rolled over. And that combined with my favorite VIX. VIX has also been above the quarterly pivot straight every single trading day from April 4th. So I have to say VIX is totally right. Because if VIX is above the quarterly pivot, we might see indexes below their quarterly pivots, and that's exactly what happened. The other excellent tell that I haven't mentioned too much is like, oh yeah, kind of like an old friend, a high yield bond index below its quarterly pivot from the start of the month. So yeah, there were ample clues that something larger was happening. And the other thing I did mention several times that I want to is the sentiment chart produced a weekly stock sell signal, only the third in years, according to this technical setup. The first one was early February 2021, which was a major top in a lot of like ARC-like names. Then there was a slight fake out here so what I'm defining as a weekly sell signal is when either one of the lines drop below the band and then go back in the band. So that was the end of January. That was a kind of false alarm because it returned the smaller orange average that I'm talking about moved back under the band February. But then again, even two moving out here, one went outside of the band, the other did not, and then back at the band late March. So that worked quite well as an alert, and it's something I mentioned in video after video. That weekly chart sentiment had gotten too lopsided, and something may be coming due. Interestingly, on the daily chart, it's the other way, but my signal is not just outside the band, it's when things return inside the band, because that means people who are a little bit more savvy, right? The move is done and the panic is kind of subsiding. So it may not catch the absolute top tick or low tick, but we just want to be in the right side. So D is really moving the other way. Weekly has worked off some of the sentiment. And so I'd like to see these turn down and move back inside the band. I've also say more of this in terms of a data edge coming up. Now, let's see. Before I look at let's look at the crypto charts in the same way that I just looked at the index charts. So Bitcoin, holding its second quarter pivot. And actually, I'm going to go to another version of this to really clarify the trend. Sometimes this is helpful to just take out all the support and resistance levels and just leave pivots and moving averages. Bitcoin looks great, even though its MACD is also down above second quarter pivot. Just very few main index assets in that category right now. Ethereum gave it up earlier in the month. Look at how that did. Break of second quarter pivot and MACD rolling over on the same day. That's the tweak at work. You were long Ethereum, already a warning sign to be below the monthly pivot on the 9th. And then, then easily pretty much escape some damage depending on how active you want to be in your portfolio. ADA below its second quarter pivot, below moving averages with a falling slope from the start of the month. So again, if you're a weekly chart investor, the perspective is different. But from an active daily chart investor, there's just no reason to be long here. And might it turn back up? Yeah, it might, especially if Bitcoin can lead the way out. And look at where I'm always interested to find where things turn highs and lows. This is a 325 moving average that I recently added to my charts thanks to another fantastic trader on Twitter. Here's Doge. Similarly was doing well for a while, gave it up about a week ago. And then lastly, Sol also gave up the quarter pivot as MACD rolled over. So, these technicals, nothing standalone, but they're working pretty well. What we want to see is when everything turns up, that's the move to really press and go larger in size, especially if we got some timing edges on our side. Okay, so next moves the coming week, I think we're more likely to have the week I was expecting last week, this week. In other words, moves both sides, market trying to find low. I'm kind of focused on Wednesday day as a key area in terms of time. And what I like to see on technical level, usually in a big drop, we need to see more than monthly levels. When I say monthly levels, I'm talking about pivots on the move. But RSIs are definitely getting to an area where smart money will step in and buy. There's S&P lowest RSI since the October bottom, but I'd still like to see some levels other than monthly tag and test and recover. Maybe it's this 100 MA on S&P. NASDAQ may reach its quarterly S1. That would be a nice low. Dow's could recover its quarterly S1 since it hasn't been dropping. And maybe Russell will go, maybe it's possible that Russell will test this yearly pivot daily 200 moving average. Now, in all these charts, if I were looking at a 5-minute ES chart and looking at this move, my alarm bells would be going off because it's just outside the Bollinger Band day after day after day. And I would not be too eager to buy this. I'd want to see close inside the band and some kind of test before piling in on the long side. So, we could see that Monday. We'll just see how the week shakes out. And let's see. So next preferred moves is, I think volatility is to the side, but market still needs to find a bottom. And I'm not sure exactly how that's going to play out. Time is really zeroing in on Wednesday, Thursday. Fantastic data. And so now I'm going to talk a little bit about data edges because this informs my idea of the next best move. So first thing I want to say is in one of the videos in March, I pointed to a fantastic data edge for VIX that was in play. And that delivered actually multiple times with several big pops, even in a bull market. This chart, which was one in one of the March videos, shows S&P bull markets only, so above daily 200 moving average. Actually, excuse me, S&P is in a bull market, but it shows the VIX return under the conditions of the last 4 weeks. So this is now over. I think volatility is going to subside. Even if the indexes go lower, the smart money is going to take off their hedges first. So we'll see that in the VIX. So I like the idea of the XX put and looking for a signal on that. And that's kind of like a 2 to 4 week option play. And then the other thing, Bitcoin holding up very well. So, and often, given the current timing cycles, that end will resume around Wednesday, Thursday. So this is a kind of key area from a timing perspective. And then another data edge that I mentioned many times is the simplest and best that I know of, and it's simply moon waxing and waning. Now, I'm not going to get into these astro here, and some people will be familiar, but this is an amazing looking at bull markets only. And if I go from 2018 to current, waning moon is still more than double the returns than waxing moon. More recently, 2020 to current, even better outperformance. November 22 to current, so current kind of our last major bear market low, even better outperformance. And then recently, even outperformance on the just waxing waning, incredible edge. So that's going to kick in this week just after full moon for the next 2 weeks. Indexes have an interesting data edge in play Tuesday to Thursday. At least I think we're going to see some rally attempts, even if Wednesday gives it back, kind of market finds that low. And then another data edge for cryptos will kick in later Thursday and into the weekend. So again, but conditions are mixed. I don't think it's going to be a V move back to highs. I think we're going to be in for a more extended period. And the next leaders might be tricky, you know. The reason for that is the Fed will, what's going on, just for the people who are curious in this, I pulled up the Fed Watch tool. And what to do with this, I'm gonna get this on the screen for those who are curious and see. This is what everybody's really concerned about. So this is the CMA Fed Watch tool. You can Google it. And what's going on is current rate is 525 to 550. Let's focus on the top number, 550. And now there's a 90, the next meeting, May 1st, it's not that far away. There's an almost 97% chance of this staying the same. Well, only a month ago, there was a 10% chance of a cut. So everyone's adjusting. And now basically market's saying no chance of a cut, none at all. And we can go out and look at the further, the meetings further away, like June 12th meeting, current rate is 550. As of only, a month ago, there was a 62% chance of cut, but now there's only a 16% chance of cut. So there's a huge difference, and so on through the other meetings, similar mass. So there's really been a change in the expectation around rate cuts. And if we look at one of the other things I tweeted out, we look at 10-year yield, it is back in an area where rally just started in stocks based on rate cuts. So this is possibly in for a more lengthy digestion period. We may see new leaders in the defensive names. The tech earnings this week are going to set the tone and kind of a tough call to make. I don't really like the real-time conditions, but the tech companies have delivered time again, so we'll just see how that plays out. Okay, so good luck, and I think that's going to do it.